Good afternoon, traders, and welcome back to this week's Hot Stocks Outlook for January 19th, 2018. Hope you're all having an excellent week out in the financial markets, and we have a lot to cover today, so let's go ahead and jump right into this. We're going to start here with Gilead Sciences, look at Cardinal Health, Fluor Corporation, and then cover really what we've been covering over the past several weeks as far as opportunities in that utilities space and how to identify big sector rotations where you can really make a lot of money and not really give back profits on your trading account. But let's go ahead and we'll start here with Gilead Sciences here. And what we have here are the daily bars and candles going back to the beginning of this year. So this is a great trade to take going into 2018. And against those daily bars, the price action, there's a black line there and a blue line. Now, what we can see here is there's been a crossover, and we're actually able to identify this via the scanning feature found within the VantagePoint software that really alerts us to when these things happen. But what we're doing here is comparing a actual simple moving average. That would be the black line that you see on the chart. Very common technical indicator. You see it all over any sort of trading platform. But what we're comparing that to is what's called a predicted moving average, or this blue line, which is utilizing predictive data generated via this artificial intelligence software found within VantagePoint. And what it's able to do is forecast prices moving forward rather than really just summarize where prices have already been, so you can get into trades before the market starts moving and volatility picks up and a trend takes off. So what we have here is a crossover between that predicted moving average saying the trend is now up. You want to look to get long the market. Now, in addition to that prediction of the moving average and predictive trend, we also have this indicator also utilizing this neural network process. And this is what's called the predicted neural index. This is an extremely accurate 48-hour indicator, or you can think of it as two candlesticks. So very short term, and it's going to help you adapt to that short-term strength or weakness in the market, so you know when to buy on dips, when you should expect strength in the market, and when you want to effectively really add to your winners, cut your losers short, and really adapt with a changing market that you're involved in. And so with all of that in place, what we have is a crossover between this value, the neural index up at a 1, but we're also even given a predicted range to really round out the entirety of these daily forecasts. And so every day before the trading day occurs, you know intraday where you should accept prices. So you're not only getting a good entry on a trending market, but also able to set limit orders and get in at really great intraday levels. And you see how this works in its entirety of understanding that, okay, well, if we want to be long this market in Gilead Sciences, we can come in and look towards those predicted levels moving forward. And you see, instead of buying right at the market, you're getting excellent entries, which really reduces your risk in the trade as far as your exposure and where those stop losses need to be, but also have you adding to your position at the right time to really maximize each trade that you're getting involved in. So we take a look at this market, and from that initial entry, the market goes sideways just for a few days, a couple more really great entries, but this market's already up 11% just in this year, going into the first month here of January of 2018. So that's how you want to utilize these forecasts, but it works the same on every single market that you're trading. So if you're trading Gilead, if you're trading Cardinal Health, Fluor, we'll look at some of these utility stocks. It's going to be the same approach and same logic as far as finding new opportunities. So here again, all the way back at the really beginning of December, you have a crossover to the upside, neural index up at a 1, informing you that this trend here in Cardinal Health is going to start moving higher. So if we understand, okay, well, the trend is going to start moving higher, we'd want to form a directional bias, take long positions on the market. We have our neural index to help us with short term. Is there going to be strength or weakness over just the next couple of trading days? But of course, we'd only want to be taking long positions in the market and utilizing this guide of the predicted high and low to help us set those limit orders, set short-term profit targets, understanding where we want to be participating in this market on an intraday basis. And you see exactly how this works. Now, you may have days where you flip a little bit below these predicted lows. That's to be expected. But by the end of the day, the market's closed above that level. And you really see how this works moving forward is even when we get these dips lower, this predicted high and low range is adapting itself to make you prepared and really help you understand where are prices expected to trade so that you can be buying at advantageous levels in the market and not really getting surprised when you see the market trade down to these levels, not getting out of your position, but rather adding to your position in line with this uptrend. So we see over the course of what's now been about a month and a half, so a really nice trend here, this market is up significantly, and most of that's happened, though, really just in the past couple of weeks here. So you see the market's up 25%, but we've really recognized this is a trend that's going to start moving higher all the way back in December. So over the month of December, you can be setting those positions, sticking with your trade so that you can be making money over this time period where you see just short-term strength, long-term strength, really everything confirming and saying this is a market you want to participate in. You certainly want to be buying at these predicted levels when you have all of that lined up, forecasting that strength for you in the market. We'll move over to Fluor Corporation here. And again, same logic. Don't really need to overcomplicate these things, but a crossover to the upside, neural index confirming that. And then you go in again with those predicted high and low levels and understand directionally your bias is to the upside. You want to be a buyer in this market. Most stocks are doing very, very well. So if you're buying at predicted lows on really any of these forecasts from VantagePoint, you're getting really great entries into these uptrending markets. And so we again bring up those predicted high and low ranges. And you see that even on periods like this where we dip down and hit this predicted low, we trade mostly in the top half of the range, but you'd have a entry rating right there. So we're really getting a good average price as this market moves higher, really not letting it get away from you before, again, this excessive strength starts to come into the market. Several entries to participate in this trade. And you see, look how much strength you've had over the course of this entire month here. Only one day, the short-term forecast was down at a 0. So every 48-hour period's forecasting strength, strength, strength. You want to be buying at these predicted lows and participating in this market. Now, those are opportunities to the upside, but over the past few weeks, we've also commented on how you can find big sector rotations in markets that are doing well and other overall sectors and individual stocks in those sectors that aren't performing well. And so what I imagine is happening right now is you have a lot of investors who have their portfolios. Maybe they have a lot of different stocks, and sure, they're making money on the upside on some of their opportunities, but then they're losing money on opportunities that aren't doing well. So you end up not making very much money at all as these utility stocks, or what seems like these safe dividend stocks, are actually losing a lot of money now. And so we look at a couple more of these, Duke Energy, American Electric Power here, and we see that this stock is now down significantly, about 12% for utility stock just over the past, again, month and a half. So really same period of time that a lot of these stocks have started to accelerate and move higher. And the last thing you want to be doing is, essentially having a hedge that doesn't work for you, where you're, long, diversified, so to speak, long a lot of different stocks, but also long the stocks that aren't performing well and having you not make very much money. So again, if you want to trade these opportunities and then hedge that portfolio that you have, you can be shorting the market or buying puts or however you want to trade the short side of a market, but from these predicted high levels in this case. So you understand that intraday, these predicted highs are very likely to be achieved, but then also get some weakness from that point intraday. But of course, stay in line with the overall trend that is now to the downside. And we've seen over the course of this now month and a half, several entries to short this market for the short-term traders, but also a really big dip over 12% here to the downside. So really nice opportunity to short the market as well. But we're really, for the most part, only seeing that in these select utility stocks where it's just quite obvious that these things are not doing well. Here in American Electric Power, again, look over the past month and a half here, almost really, definitely over a month and a half. Look at the neural index. So those short-term forecasts are constantly forecasted to the downside. You've got the trend to the downside, and that says use the predicted high levels to set those short positions. And we see if you're shorting at these levels, you're getting excellent entries into a market that's now trending lower. And not only are you making money on those stocks that are performing very, very well all throughout the S&P 500, but you're shorting stocks that are not doing well. And that's what's really maximizing your profit potential and not having a situation where you're making money in one area of the market, but losing money significantly in another part of the market. And you see these things have just been beaten down over the last month here. So, that's all we have for today. Some really great opportunities. But again, building off week after week, understanding what the trend direction is, where that short-term strength or weakness is so we can adjust our positions, and then riding these trends as we've really seen them explode all over the market. So really great opportunities here. Hope you all are doing very well out there in the financial markets. Once again, this has been our Hot Stocks Outlook for January 19th. 2018, zipping through this new year already. Best of luck to you traders out there in the market. Thanks again, and bye for now.